Let's move from the economy and the Fed to the markets and talk a little bit about the change in sentiment, a little bit of a change in sentiment over these last few months in the financial markets, especially with regard to the AI trade and tech stocks. First of all, let's take a look at South Korea because that's been a big story here in these last few weeks. The rapid unwind of the big move up in the South Korean market in recent weeks. So here we're looking at changes in or the quickest declines, the quickest bear market declines in the history of South Korea's Kospi index. Now, the Kospi goes back to the early 1980s. So these are the most rapid declines, 20% declines, bear market declines in that time frame, going back to the early 1980s. You can see where this most recent decline ranks. Now, as we're recording this, the Kospi is down by over 30% since it peaked in late June. But the time it took from that peak in late June until it fell into a bear market, a 20% decline, was just 16 days. By far, as you can see from the chart, by far the quickest decline in the history of the quickest bear market decline in the history of the index. We had never seen a drop that rapidly, and this is just to show that booming markets can unravel very, very quickly. We saw this in the US in 2000. We saw it for a short time in the US even in 1998, an episode I alluded to earlier, when we had a near bear market, a very deep correction in the S&P 500 in 1998 that unraveled or played out very, very quickly. This is what led the Fed to step in and cut interest rates three times in rapid succession, and we're seeing it play out now in South Korea. South Korea is important because historically the Kospi has been called Dr. Kospi. It's been considered a leading indicator for global markets in general, a leading indicator for the global economy. It's a market that's worth paying attention to, and right now, obviously, it's flashing a very big warning sign. If nothing else, again, this is a cautionary tale that booming markets can change quickly, can pivot very, very quickly. This is also a cautionary tale about valuation because South Korean firms involved in the AI trade, firms that produce memory chips, these firms are experiencing extraordinary profits right now. And so they're seeing relatively low valuations. Looking at forward price earnings ratios for the Kospi, we're looking at single digit numbers for the end of 2026, 2027, and into 2028. If we look a couple of years ahead, in fact, based on expected earnings, the Kospi is currently trading at less than 5 times those expected earnings for 2 years going forward. Extraordinarily cheap by that measure. But again, those are not sustainable. Those are unlikely to be sustainable profits. That's not a new normal. We're not going to see a 5.0 price earnings ratio going forward from the Kospi because earnings aren't going to continue to be this strong. It's unlikely that earnings are going to be this strong. We're seeing an extraordinary boom at the moment, and that's temporarily keeping price earnings ratios in check, both current price earnings ratios and forward-looking price earnings ratios.
To watch this month's complete analysis and receive daily updates directly to your inbox, become a member at cycleframework.com.